morning, everybody. Welcome to this tax risk webinar. For those who do not know me or have not met me in person, I'm Rodney Caruana, Managing Director at FPM Short-Term Insurance Brokers, and thank you all for your time this morning. Just to give you some, I thought I'd just set the tone by giving some background to the sort of current environment that we are operating in. The South African economy grew by 2% in 2022. This reduced to 0.8% in 2023 and down to 0.5% in 2024. So the economy is largely stagnating. Along with this, the number of businesses that are liquidating and high net worth individuals who are emigrating has resulted in little to no growth in the taxpayer base. And we are largely a welfare society, so SARS are under extreme pressure to improve their revenue collections. And in fact, last year they improved their revenue collection by 4%, which is almost 8 times the actual economic growth rate. And one wonders how those numbers stack up. But the reality is that most of the revenue collection, or a large percentage of it, has been through the conducting of tax audits. They grew their compliance revenue collection by 25% last year. So tax audits have become the flavor of the moment. The government are throwing millions of rands worth of resources into SARS to improve their audit capability. And with these audits come unfortunately, some questionable practices by the revenue authorities. And in fact, some leading tax experts are questioning the constitutionality of some of SARS's practices. So we are in a situation where a lot of companies get faced with an assessment out of the blue, and they don't have the time, the expertise, or the knowledge on how to tackle the problem. So very often they just say, well, let's just pay SARS to get the problem to go away. This is a dilemma that many tax-paying entities face. So with that, no further ado, I'm going to introduce you to Willem Lombard, Managing Director at Tax Risk Underwriting Managers. Willem holds a master's degree in business leadership from the University of South Africa. He has extensive experience in the insurance profession, having held directorships and management positions at various businesses, including Kudos Underwriting Managers, Pan-Africa Life Limited, Pan-Africa Insurance Limited, Hollard Insurance, and Prestasi Brokers. Willem has also served on the board of the South African Insurance Association. And Willem has been the Managing Director of Tax Risk since the company was formed in 2014. So, Willem, welcome, and take it over from here.
Thank you for the introduction, Rodney. And thank you for the invitation to speak to your clients. So I'm hoping not to bore you to tears today. I'm going to run through some statistics. I'm going to run through some product specifications for the attendees today, and hopefully you'll learn something as we go. A bit of background about our organization. As I say, we are a product provider to FPM. FPM, of course, is your broker. The insurance product is underwritten by Bright Insurance Company. And for those of you who don't know Bright is, it's the old SA Eagle. A few years ago, they rebranded to Zurich, South Africa, and not so long ago, they've rebranded again to Bright Insurance Company. So Bright's been around for many, many years in various names. It's a very good insurance partner to have. Long track record with significant solvency. So when it comes to the security of this insurance product, it's the balance sheet of the insurance company that's of importance for the peace of mind of our clients. Just a little bit more about us. This is our leadership team, the board of directors. Our chairman is Mr. Peter Schmidt. Both me and him are insurance people. He is an engineer by qualifications. So he's been around the insurance industry for many, many years. Currently, he's a private equity player, so he invests in various insurance businesses, and which he then runs with the management teams. Rodney's been kind enough to introduce me, so the less said, the better about myself. More of our directors, Mr. Clive Noland. He's the founding chairman of Nolands International and Nolands South Africa. It's one of the top 10 accounting firms in South Africa. He's been involved in various business ventures, including the establishment of the Radisson Hotel Groups in South Africa. He's been on the board of many listed and unlisted companies, and he's, of course, on the board of us. And also Professor Walter Geach. Professor Walter Geach is a admitted attorney. He's also head of department of accounting department of the University of the Western Cape, where he's in charge of taxation. He's written many, many textbooks. For any of the accountants in the audience this morning, you probably studied out of some of his textbooks. So a really knowledgeable individual. And then some of our advisory body consists of Dr. Daniel Erasmus and Mr. Schalk Petersen. Both of them are tax attorneys. Daniel is very well known. He's an international tax attorney. He's based out in the US. And he's involved in many of the large tax controversies. And Schalk Petersen runs a local tax attorney firm, tax legal practice, that specializes in tax, and very, very knowledgeable about the subject matter. And we often consult with these two gentlemen, especially on the very technical matters where our clients need higher level support and advice. And that's also the reason why I've introduced these gentlemen to you, to give you that understanding that our business as an insurance business is made up of both tax skills and insurance expertise. And the combination of this then gives us the ability to underwrite tax risk insurance on behalf of the insurance company, which is Bright. And then we distribute the product through the various insurance brokers in South Africa, of which FPM, as I said, is one of our most important brokers. So that's just a little bit of our business per introduction. So just a short note of what tax risk insurance is actually all about. So this is the definition of what we do. It's the golden line that will run through the presentation this morning. And simply put, I'm going to read the slide for you because it's easier that way. It's effective insurance against SARS tax audits and related disputes. If an individual, a business, or a trust is selected for audit by SARS, or if there's a dispute about an unfair tax assessment in terms of which a SARS is demanding additional taxes, then tax risk insurance will appoint and pay for a team of tax professionals to deal with this matter. And that ensures a fair tax audit and dispute outcome. Right, so it's a defense type product. Typically what will happen, and for many people in this audience, it has happened already. And if it hasn't happened to you yet, it probably will, because we'll look into the statistics shortly. But you get this blue letter from the South African Revenue Service that says you are being selected for audit. Or, worst case, is you get this letter from the South African Revenue Service that says you owe them additional taxes. They've disagreed with how you or your accountant calculated the taxes, and they will send you this demand. And if you've seen those letters, it's generally not a very friendly letter. They're not trying to make any friends by writing softly worded letters. It's a fairly demanding piece of paper where they demand additional taxes. Right, then two things generally happen. Is the blood drains from your face because you owe the state money and you probably disagree. And the second thing that happens is you pick up your phone to your tax accountant or tax attorney and say, please help, I have this issue that's come my way. And of course, they'll be willing to help, but who's paying? Right, so tax audits and disputes can be very stressful. There's no doubt about it. And it can be very expensive, especially if you have to bring in expertise from outside as example, a tax attorney or a tax advisor or specialist, and run into many, many thousands of rands. And this is money that the general taxpayer hasn't budgeted for. All right, so the next slide is a short video I'm going to be playing for you, and that just summarizes more eloquently than I can put it of what the tax product is all about.
So you do everything right. Pay your taxes on time and maintain your records. You even have a good accountant to check and double-check your tax returns. This doesn't guarantee that you won't be audited by the South African Revenue Service. You see, no matter how perfect your tax documents are, SARS is looking for ways to increase tax revenues. So they are looking for non-compliance. And they have tons of ways to determine if you are high risk. Let me rephrase that. It doesn't matter if you aren't non-compliant. It only matters that they think that you might be. And trust me, if they are going to look through your records, the tax man is clever enough to find even the smallest error. And if they think they found an error, they will tear apart your files. And then they hit you with a reassessment. Sometimes they don't even tell you why you were reassessed. You just get hit with a notification that you owe them additional taxes. They might even issue a garnishee order and take the money right out of your bank account. So, if SARS issues you with a reassessment, you have two options. You can pay the reassessed amount and penalties to make it go away, whether you're wrong or not, or you can stand up to them and prove you did nothing wrong. The best chance is for you to have your accountant or tax lawyer go to battle for you, which might take weeks or months, and all that work will cost you an arm and a leg in accounting and legal fees. But there's a better way. If you are ever selected for audit by SARS, or if there is a dispute between you and SARS about an unfair reassessment whereby SARS is demanding additional taxes from you, then Tax Risk Insurance will appoint and pay for a team of highly qualified and experienced tax experts who will fight the case on your behalf without racking up tens of thousands of rands in accounting and legal fees. This team can include leading tax accountants, tax attorneys, and even your own accountant as may be required to ensure a favorable and fair tax audit and dispute outcome. It's a perfect win-win situation for everyone. So don't wait. Cover your business partners, your trusts, and yourself with our low-cost tax risk insurance, and never worry about a tax audit or dispute again. Do not submit another tax return without tax risk insurance. Speak to your broker to get a quote now. When it comes to your taxes, Tax Risk Insurance gives you the peace of mind when you need it most. Additional information on key product features are available on the Tax Risk website, www.taxrisk.co.za. Tax Risk Underwriting Managers is an authorized financial services provider.
Right. So hopefully that gives you a fairly good understanding of what the product's all about. So the next part of this presentation, Rodney has already alluded to the fact of the economic circumstances, and I'm not trying to bore you to death, like, as I said, with statistics, but it is useful to remind ourselves the economic environment that we operate in and why clients and taxpayers such as yourselves are becoming more and more exposed to this risk of being selected for audit or getting attacked by an unfair tax assessment. So Rodney made a comment about this. This is the economic growth in South Africa since 2019. As you can see, there was that hiccup in 2020 due to COVID, where the economy contracted by almost 6%. There was some recovery in 2021, a little bit more in 2022. But if you draw a trend line through this economic graph, you will see that the economy has not grown by more than 1% in a very long time. The Minister of Finance in his budget speech was hoping that the economy would exceed the 1% growth rate this year, but economists are more and more heading towards a growth rate of still that's going to be less than 1%. Now, economic growth rate, as we all know, of less than 1% does not even keep up with the population growth in South Africa. It's not enough to create jobs, to absorb the young people into the new entrants into the job market. It's not a great situation for the South African economy to be in. And one would then expect that the amount of tax that SARS is able to collect from a stagnant economy is similarly going to be stagnant. This is not the case. So this graph shows the gross tax revenue that the Revenue Service managed to collect from the 2021-2022 tax years. As you can see, from 21.7% to 9.7% to 4.2% to 6.9% in the last tax years. So that's the increase in tax being collected from an economy that's not really growing. And there's only really two ways that the revenue service can collect more tax in a stagnant economy. One is to introduce new taxes. One would remember some time ago is the sugar tax, fuel levies, those sorts of things. And more recently, the government attempted to increase the VAT by an additional 2%, which of course did not work out. So that's the one way that SARS is able to collect more taxes. But really, those new tax categories is a drop in the ocean when it comes to increasing the revenues. The other way to be is to be more effective in collecting taxes from the existing tax base. And as we know, the tax base is not growing. The number of people or the number of people and businesses who's contributing to the fiscus is not growing. We're not going backwards, but it's not growing by any significant form. So the revenue service is able to extract more taxes from the existing tax base, which then clearly means is that you are more exposed. So this top graph will show you the number of audits that SARS has done in the last year. So that's the 2023-2024 tax year. The SARS audited just over 2 million taxpayers, which is up from the previous year that was 1.8 million. So in an audience such as this, there's always a few that experience this, that receive those letters. Many of those are not high impact. So it's what's called verifications, where SARS has just wanted to check that what you've submitted to them and what you are claiming for is in fact correct. Because in South Africa, we have the self-assessment dispensation. Of course, lately SARS has implemented auto-assessments, where SARS brings in the information from third parties, like your bank accounts and payroll, etc., and then auto-assesses you. The counterbalance to the self-assessment is, of course, the audit, and that ensures that people pay their taxes as they should. And the area at the bottom, that oval graph, shows you what the compliance revenue increase was in the last few years. Now, compliance revenue means is when SARS does these audits, how much money are they able to generate in addition to what they've just collected normally? So that's the compliance function, right? And as you can see, there's been a significant growth in the compliance revenue that SARS is able to extract from the taxpayers because of the audit interventions, and raising additional taxes to those audit interventions. And then one would then think that it is only the tax dodgers that's at risk, right? So SARS will naturally only, one would think that SARS will only audit those people who willfully underpay their taxes, because those are the people who's targeted for it, right? But that's in fact not the case. So this is the pie chart of compliance revenue. As you can see, SARS collected 260 billion rands worth of compliance revenue in the previous year. And that segment at the bottom right of the pie segment shows the amount of compliance revenue that was collected from criminal and illicit economic activities. So those people that willfully defraud SARS. So, you must pay your taxes. So it's very good that SARS is concentrating on it, but it makes up less than 10% of the total compliance revenue number comes from the criminal and illicit activities. The rest comes from all the other categories of honest taxpayers that they don't want any problems from the state. They submit their taxes. They probably have a very good tax accountant that's helping them, but still they are being attacked by SARS, and it's the majority of the compliance revenue comes from that segment. Of course, the criminal illicit activities, those are the items you see in the newspapers. They are newsworthy. These are often celebrities that you will read about that's got into trouble with SARS, but it's generally less than 10% from compliance revenues are collected from these type of people. And of course, it's not going to get any better, unfortunately. So these are news clippings. The top news clipping is from the sanews.gov, which came out just after the budget 3.0 was announced. That says the South African Revenue Service has been allocated 3.5 billion rand in the current financial year, and an additional 4 billion rand over the medium term. Right, so government that says, right, we can't raise the 2% additional VAT. They've given the commission an additional 3.5 billion rand in the current financial year to collect more taxes. More recently, Kieswetter said that since April, that the taxman employed an additional 500 debt collectors. Another 250 will be added to the SARS payroll in June. So that has happened already, of course. Our estimate is that this should at least give us 20 billion rand additional taxes. We are targeting debt collection of the overall composite debt of 120 billion rand. So all of this information considered means that taxpayers can expect a more aggressive and in-your-face SARS as they are trying to close this fiscal gap through their collection activities. And it doesn't matter if you're an honest taxpayer or you have a very good tax accountant, this will most probably happen to you, or the risk of this happening to you has increased significantly. So that exposes us to risk. Risk is insurable. So you can choose to accommodate this risk yourself, i.e. self-insure, or you can choose to ask an insurance company to carry this defense. And we'll get to some examples later on. So who can benefit from what we do? These are our clients. These are the people who can most often benefit from what we do. Companies, clearly, because companies' taxes are complex. Trusts, and why we say trust is because SARS told us that trust is a target for them. It's in the annual report. It's not a huge secret. You can go to the SARS website. You can download the annual report. It's full of statistics. But in that SARS then says they are targeting trusts because in many instances, trusts aren't set up properly, unfortunately. And SARS sees that trust is in many instances a way to circumvent paying taxes. So we know trust is a target for SARS. Business owners and directors. Provisional taxpayers, with other words. The reason why that's a target for SARS is because your finances as a business owner or director is often closely intertwined with that of your companies, right? So it's much more complex than a salaried individual. Salaried individuals can buy tax risk insurance cover if they want, but their taxes are generally not complex. And they're not prone for problems with SARS. You'll still get audited, so you'll still get that nasty blue letter from SARS. But in general, SARS is asking for copies of if you're an individual, of your medical aid certificate or your travel log. These days, they focus quite closely on your home office, if you are claiming home office expenses. These days, they even ask for photos of the inside of your office to make sure it's a proper office. So, but generally speaking, you provide those information to SARS, and as a salaried earner, if everything is hunky-dory, you never hear from SARS again. So on our definitions, those problems aren't complex, and we are able to solve them very quickly. So our target market is, of course, the people with more complex tax issues because it's of the nature of that risk. And that is also then the same, of course, for high net worth individuals who's often involved in tax planning. So tax avoidance is not a criminal activity. Tax evasion is a criminal activity, of course. We don't want that. But tax avoidance means it's proper tax planning where you get an accountant, especially for high net worth individuals, to make sure you pay what is legitimate, but only what is legitimate. So that can be a bit more complex than your average salaried earner. So how does this work? Just to recap. And I'll send you the information after the session. I'll send you an email with all this information with the highlights so you're able to absorb that if you forgot some of the information we provided this morning. But it says if you or your business or trust is ever selected for audit by SARS, or if there's a dispute about a tax reassessment in terms of which SARS is demanding an additional taxes from you, then tax risk insurance will appoint and pay for the team of top tax professionals to deal with the matter. Right? So we've discussed that already. The resources that we appoint comes from the external market. It comes from people in private practice. So if you are a policyholder and you run into a difficulty with SARS, it is not office accountants or office attorneys that work for us that we appoint. Because why that's important is you need to feel comfortable that the people that we use are people in private practice, right? So these are tax attorneys that specializes in fighting with SARS on the legal battle, or tax accountants who specializes in the field of tax. These aren't your general run-of-the-mill accountants or attorneys that work for corporates. These are specialists, and because why that it's important to you is SARS is this big, massive machine employing more chartered accountants than anybody else in South Africa. They understand the Tax Administration Act backwards, and you as the business owner, or you as the high net worth individual, or or you as the company, you have none of that, right? So you might be doing a very good job. You have your head in the scrum, running your business. You might have a very good tax accountant on the side that helps you with your tax affairs and other accounting practices, and you don't expect this problem from SARS. But when this large machine attacks you, you must have that peace of mind that we will bring in the bigger dogs. So that's how you fight a big dog, is you bring a bigger dog, right? So we have access to this network of very specialized people that we will bring in to defend you, and then we'll pick up the tab, which doesn't cost you an arm and a leg. That. Most importantly, the grayed out section at the bottom, especially I see there might be one or two accountants in this call this morning, is your own tax accountant will be a central part of this team, and the fees will be paid for the services for the duration of this claim. So in many instances, if it's not a complex issue and your own tax accountant feels that he's capable of defending you himself, we will then, of course, assess the claim to see what the nature of the problem is, to make sure the direction that your accountant is following is correct. We will then give him some advice and some guidance, and then give him the instruction just to carry on with that dispute with SARS. And at the end of the matter, he sends us his bill. So he's able to provide you a high-level service, and you don't need to pay for it again. And then also, in addition to, if it's a more complex matter, of course, we'll bring in these outside expertise and we'll pay for those, and that then strengthens the hand of your accountant to deal with the matter effectively. And the reason why that's important for us is there's already a trust relationship between you and your accountant, which we are not looking to dislodge. It's very important for us. But secondly, also, your tax accountant knows your history. They've already done all the work. We don't need to go and re-engineer all that work to find out what the nature of this issue is. So it makes sense to us to make your tax accountant part of this defense team, and then we'll pick up the tab for it to make sure that things work out at the end. Right, so these are the categories of tax that we cover. I always say that we cover almost all local taxes. When I say almost all, there are specific exclusions. We'll get to the exclusions shortly. It's always important for our policyholders to understand what's not covered. So when there's a claim, we understand where we are. And I say local taxes because our policy specifically doesn't cover international tax. So anything with cross-border transactions, transfer pricing, double taxation agreement, base erosion, profit shifting, that's more the dispensation of large organizations. And we cater for the bulk of the taxpayers that run businesses locally. So we cover almost all local taxes, and we'll drill down a bit what that means. The benefits, just to summarize, so it removes the uncertainty of an unexpected SARS audit and a related dispute. Right, so if you run into a difficulty with SARS, it's almost always unexpected. That's why it falls within the definition of insurance. That's like a motor vehicle accident is an unexpected event. A motor vehicle theft is an unexpected event. You know, there's a possibility that it will happen. There's a real possibility that motor accidents happen, but you're not expecting to make an accident. And similarly with tax insurance, you're not expecting to run into difficulties with SARS because you must continue to submit your taxes to SARS as normal. You do your best to comply, but even in spite of your best efforts, you are then attacked by SARS, or you get these reassessments where they demand additional taxes. So it's always an unexpected event. And at the moment, most of you, almost all of you on this call this morning, are self-insuring that risk. So if this happens to you, you then have to fund the defense out of your own pocket. And more often than not, if it requires a tax attorney, you got to phone around to find out where you can get the best skills, and then pay those skills to make sure that you have an adequate defense. So you're self-insuring that. And the offer that we have this morning is that you can buy an insurance policy at fairly good premiums and insure those type of events. So the premiums are affordable. We'll look into the premiums shortly. Cover is retrospective, and there are no waiting periods. So that's very important, right? So tax audits, by their nature, it looks backwards. You don't audit somebody going forward. You always audit going backwards. So cover is retrospective, and there are no waiting periods. So if your cover starts today and next week SARS writes you a letter demanding additional taxes for 5 or 10 years ago, you are on cover. There's no waiting period, and cover is retrospective. I must add here, though, that if you buy the cover today and you're already in trouble with SARS, there's already a dispute on the go, or you've already been made aware of an order that's in progress, or there's some other difficulty during the application process, we ask that question, which of course, we expect you to disclose that. So that existing issue will not be covered, right? So you can't have the car accident and then buy the insurance the day after and expect the insurance company to pay for it. It's a risk-based insurance product like anybody else. So we won't cover any existing issues that's on the go. You can still buy the cover. So let's say, for example, you have a dispute with SARS around your VAT, and you want to buy the cover. We will ask that question. You will disclose to us you have this VAT dispute. We will ask some information about that, and then we'll ring fence that VAT dispute and expect you to resolve it. You will still have then cover for all the other categories of tax, like pay as you earn, capital gains tax, income tax. All those other categories will be covered. And then once you've resolved your current issue, we will bring that issue back into the cover. And resolve the issue usually means is you get a clearance certificate from SARS that says your matter has been resolved, no issue about it. In addition to, if you buy the cover, we can give you access to the expertise that we have, so you can employ them, but it will be at your own cost. I think that's fairly straightforward, that all damage cannot be covered. The next point is some of South Africa's best tax specialists are appointed to defend the claims. We've spoken about that. We farm our skills or our service provisions out to experts. Your own accountant's fees are covered for the duration of the claim. We've spoken about that already. And then peace of mind when you need it most. What we don't cover, so that's, as I said before, this is very important, what we don't cover. And this is the highlights of what we don't cover as it relates to tax insurance, right? I haven't put all the exclusion in there because the other exclusions are the normal insurance exclusions. For example, if you don't pay your premium, there's no cover. So I haven't put those obvious ones down in here. Those are all in your policy contracts. These are exclusions that is particular to tax insurance. So let's go through that list quickly. Tax evasion is not covered, right? So you can't willfully underpay your taxes and then expect the policy to operate. No insurance company in the world covers fraud. So if there's fraudulent activity, if you've committed fraud against SARS, your policy will not operate. Honest mistakes, of course, is covered. Honest mistakes happens fairly regularly, where you've made a line item entry or your accountant has misunderstood a provision of the Tax Administration Act. Then you will still provide the cover. We will still provide a defense to make sure that SARS is acting procedurally and substantively correctly. But you will, if at the final analysis it does then add up that you did underpay your taxes, we'll go to you and say, listen, you've underpaid your taxes, please pay the balance of those taxes. But then at least you know that you've had a fair shake, right? So the SARS is correct. We've evaluated everything. They've treated you fairly. The penalties are fair. The taxes that the charges are fair. You should have paid those taxes, and then you can just proceed to pay those taxes. Part of the services, we will try and negotiate that we get the penalties and interest waived. If there's payment arrangements that needs to be made, it's part of the cover that we will negotiate with SARS. And we're very often successful in that, especially if it's an honest mistake. And especially if it's a first-time mistake, it's a first-time offender. We are very often successful in getting those penalties and interest waived. And then you're just responsible for the full outstanding debt. And in extreme circumstances, we've even been successful in negotiating the partial payment. So we make offers of settlement to SARS, and that's part of the service. Right, second exclusion is matters which predates the inception of the policy. We've discussed that already. You can't have the car accident and then buy the insurance policy. So pre-existing matters will be excluded from the cover. Income generated outside of South Africa. So as I said, international taxes are excluded. However, if you're an individual, a professional person, and you are on contract to somewhere else in the world. In South Africa, that happens very often, that if you're an IT specialist with a contract to the UK, or you're on contract to a company in the United Arab Emirates, and you're getting paid in dollars as an individual, not as a company, and that happens fairly regularly in South Africa. So as long as you're a South African tax resident, but you're on contract somewhere else, that will be included in your cover. A company does, it's not the same. So if you're a company that has international taxes, those are continue to be excluded. But we've recently brought in, if you're an individual on contract somewhere else and you're still a South African tax resident paying taxes to SARS, you will be covered under the policy. As I said, international taxes are excluded, and that includes customs and excise, very importantly, exchange control, transfer pricing, and the more complex things like base erosion, profit shifting, etc., etc. Those are all under the classification of international taxes are not covered. If you're unsure, you can always give me a shout. We can talk about it, and then we can clarify if you will have cover if you're involved in that category of business. So employment tax incentives, it's a specific category of tax, is also not covered. And the reason for it is employment tax incentives is a mess at this stage. Lots and lots of court activities going is involved in that, and that's become an uninsurable event until such time as this piece of legislation has spent some time in the courts and we've got some certainty because this act was written full of loopholes. So as soon as we have some certainty on the interpretation of some of those provisions, we might bring that back into the cover. But for now, employment tax incentives are excluded. And of course, we don't pay for the normal preparation of your tax returns and supply of routine information. So you must still submit your taxes to SARS. So nothing's changed in your life with regards to submitting your taxes. Your tax accountant still does the same thing. And that includes if SARS says, send me a copy of your invoices, of your payroll. It's copy, paste, send, right? That's the request for routine supporting information. It's called verifications in technical language, which SARS is just checking that what you're claiming is correct. So generally speaking, copy, paste, send. So there shouldn't be any significant additional activity involved because those trial balances would have already been prepared. You would have already, if you're an individual, have access to your medical aid certificates, your retirement annuities, your travel logs, etc., etc. So that's part of your normal preparation of your tax return. That continues. And then also, of course, as I said before, if you have underpaid your taxes, we don't actually cover the back taxes. We don't pay for your underpaying of your taxes, the interest and penalties. Those remain your responsibility. One cannot insure somebody else's taxes. As you can imagine, that would be a recipe for disaster. Insuring somebody, we don't want to give people the incentive to underpay their taxes because the insurance company will pick up the difference. As you can imagine, that would be an untenable situation. But as I said before, part of the cover is to negotiate with SARS to see if we can waive these penalties and interest and make sure that things are fair. So those are the exclusions. I think they are quite straightforward. I'll send you after the session, I'll email you a summary of this so you will have it in front of you if you are ever uncertain. Right, here's a case study just to give you an idea of what we mean when we say tax risk insurance. This is one of it's a middle of the road case that we've had a few years ago. Some of it is smaller, some of them are much larger, but this explains what we do, right? So it's a very useful example. For those of you who've seen this before, this is what an assessment looks like. It's been redacted to protect the innocent. And this company, SARS, was demanding 604,000 Rand in additional taxes. This was a small to medium-sized company employing about 15 people. 604,000 Rand is unaffordable. This would have put this company into liquidation. With SARS, with its pay now, argue later. So the client's accountant, we know the accountants very well, it's top-notch accountants, so nothing wrong with their skills. So they've submitted dispute resolution procedures, but SARS did not want to know anything about it. They expected payment, and then you can come argue later. In fact, the tax laws allow SARS to take this money straight out of the bank account in certain circumstances. We think some of those actions of SARS might be unconstitutional. Those will probably get tested in courts at some point in time. Right, but the bottom line is this SARS demanded 604,000 Rand from this client. She didn't expect this demand. And clearly a very stressful situation because the business is about to go into liquidation. Additionally, she's now not tax compliant, which means she can't tender for business, right? If you're in a tendering business, you will know that you would need a tax clearance certificate. And if you're not tax compliant, you cannot have a tax clearance certificate. So never mind that she owes SARS money, she's also not able to generate any new business. So a very, very precarious situation for our client. We then appointed these tax attorneys, and I mean it's worthwhile to understand a little bit about the circumstances. So SARS did a verification. SARS, as they normally do, or sometimes do, they've asked for supporting documentations, but they've asked for quite a lot in this case. Invoices, payrolls, but a lot of information was requested. The client then came to an agreement with SARS that she would email the supporting documentations in batches because it was too much to upload via e-filing. E-filing's uploading capability is too small. So in agreement with SARS, she emailed all these documentations into SARS in batches, which was during the course of the afternoon. And by the next morning, she received this assessment from SARS. Now, two things effectively happened. One is that there was no way that SARS could have applied their minds to the information that was put in front of them during the course of the evening in order for them to get to this result of this assessment. It would be practically and humanly impossible for SARS to digest all that information that was provided in that short period of time, which means that taxpayers' rights has been violated, right? So they've called for this information, the taxpayer provided it, and SARS did not apply their minds to the information that was provided to them, which is fundamentally unfair, right? So SARS is supposed to apply their minds and be diligent in the work that they do. It's a constitutional thing, never mind a Tax Administration Act thing. The other thing that happened is that SARS did not issue a letter of findings. Now, in terms of the tax laws, is before SARS can issue an assessment of this nature, following the completion of their audit, they must issue what's called a letter of findings, which provides the client in 21 working days to respond to SARS, and only after that 21 working days are they allowed to issue this assessment. SARS did not issue a letter of findings, and effectively SARS is taking a shortcut, right? So they've now put the ball into the taxpayer's court to prove her innocence, which of course it cannot be correct in a constitutional democracy. You cannot owe the state money and you don't know why. You haven't been updated. You haven't been informed. You just get stuck with this bill. So procedurally, SARS has violated the client's rights. Of course, the average taxpayer does not know what their rights are. We are not experts, or most of us are not experts in what the Tax Administration Act says and what rights it imposes on us and what rights it imposes on SARS. We don't know that. It's not our skill set, right? So we did not even negotiate with SARS on the quantum, the math, how they got to the number of 604,000, because it was not relevant. SARS acted procedurally unfair, and the lawyers then contended with SARS because the client's rights were violated. That assessment is deemed automatically invalid, right? So there's case study, there's case law around SARS's responsibility to be procedurally unfair or procedurally fair and substantively unfair, and therefore the lawyer then defended on that matter and reminded SARS of the client's rights. So after a little bit of legal wrangling up and down, we received this letter from SARS that says the South African Revenue Service has considered your notice of objection dated 2018. Your objection against the 2018 tax period has been allowed. So no huge celebrations or large explanations of what went wrong when. You basically get a one letter from SARS that says we agree with your objection and your objection has been allowed. That's the end of the story. To this day, we do not know where SARS got the 604,000 rand from, because we never contended the quantum. We contended the procedures, and that happens in a lot of our cases that we deal with. This is an example of a larger case. Oh, so by the way, which that slide doesn't show, is that our client then got a refund from SARS of 599,000 rand, which was the refund that she expected in any event. Some of the cases are larger. Here's one of our larger cases where SARS demanded 12.7 million rand from our client. So that's an example. It gives you an idea of what we do when the policy becomes effective, and why it's important for taxpayers to get themselves protected by an insurance policy. So this is what, if you want to take the cover, this is what it looks like. This is the process you go through for the cover. It's a one-page application form, so it couldn't be more simpler. We're going to drill down on that application form shortly. The top part of the application form is your details, who you are, where you come from, what your annual turnover is. The middle part is your bank details, so we can collect debit orders. And the bottom part is some underwriting questions. So we're really trying to understand your history, if you're on current problems. So we're asking you to disclose current issues. It's an insurance policy, so you have to disclose all relevant information, and that's really what that application asks. Mike asks in our chat box, he says, are the cost of any possible tax or higher court cases costs covered by the tax insurance policy? The answer is yes, Mike. It's a cradle to grave type cover. So from when the cover starts is when the dispute starts, and if it has to go to court, the policy will pay for that also. There are indemnity limits, and we will look at the indemnity limits. So as long as all of this falls within the indemnity limits, you are covered. We've only once run out of indemnity limits in our 10-year history. For the basic reason is that we almost never go to court. Because we have skills and SARS also knows what their position is. And as soon as SARS figures out that we can go to court and have a real possibility of winning the case, SARS generally will back down before the court date because they don't want to be in court. It's expensive for them too, especially if they lose the case. They might lose with cost, which means is they will then need to pay our cost for defending this claim. So we hardly ever go to court because SARS very early on in this matter figure out that we know what we're talking about. The skills and expertise that we have is second to none, and the probability of them losing a case is therefore high, and therefore we hardly ever go to court. It's not in our best interest to go to court. It's not in our clients, our policyholders' best interest to go to court. Of course, you want to resolve the matter as quickly and easy as possible. So our interests are aligned to get out of this problem as quick and as easy and as painless as possible at the least possible cost, because it's in your best interest and it's in our best interest. As an insurance provider, we manage those costs. So we make sure that the professionals that we appoint to defend you does the same thing, that they're on the same page as us. So we have assessors, very good professional assessors, that make sure that the route that these attorneys or accountants follow is the shortest, best route to a resolution. And that's how we add value to this process, that we are able to not let the clock run, right? Generally speaking, and it's not all of them, but there are some unscrupulous people that think the longer the clock runs, the better, because they can charge by the hour. So we make sure that that doesn't happen. So I hope that answers your question, Mike. So that's what the proposal form looks like. The second page of the proposal form, or actually the third page, is the rates and indemnity limits. So when you fill out the application form, you can determine what you can see what your premium is, and you can see what the maximum amount of the cover is. And we'll drill down on that shortly, just to make sure that you know what it is. The first part of the application form is a summary of the cover. So a lot of what we discussed this morning is summarized, or almost all of it is summarized on the front page. So you don't need to guess if am I covered or am I not covered. We've provided the summary of the cover on a one page. Second page is your application form. Third page is your rates and indemnity limits, so you're able to understand the nature of your policy at a glance. Right, so let's drill down on the application form. Importantly, we have the same application form. Doesn't matter if you're an individual, a company, or a trust. There's a tick box at the top right-hand corner that identifies, are you completing this application form as an individual or as a company or as a trust? So you just tick that application form. Importantly, every taxpayer buys his or its own policy. So if you're a company and you have more than one company in your groups, so you might have two operating companies, you might have a holding company, you might have a trust, you might have one or two directors in this business. Each of those are individual taxpayers in their own rights, and they therefore have to take out cover in their own individual capacity. And then in that way, you can decide who gets covered. You know, you might not want to cover the holding company because you believe it's lower risk, than the 2 operating companies. You might want to cover yourself and a co-director, but the 3rd director can look after himself, sort of thing. So you can then pick and choose who has the cover. But importantly, each taxpayer, doesn't matter if you're an individual, company, or trust, they buy their own policy. You'll see we have 2 types of trust, and we'll have a look at it shortly. This is what the rates look like. The companies, so for companies, we look at your annual turnover in the last financial year, and that's your premium. So if you're a small company with less than 3 million rands annual turnover, your premium is 265 rand a month. If you are a turnover company of 100 million rand turnover, your premium is 1,540 rand a month. If your annual turnover is more than 100 million rand, you fill in the same application form, the space where you put your annual turnover, and we do special underwriting for those larger companies. So we'll ask more questions. We'll get back to you. We'll have an in-depth discussion about the nature of your business. So for your small to medium-sized companies, the rates are fairly fixed. For the larger companies, we'll do special underwritings and we'll do quotes for you. You can speak to FPM, your representative FPM around that, and we will assist you with that. Next to it is your annual indemnity limit. You'll see we have 2 indemnity limit ceilings. One is a rand amount, and the other one is the number of hours of professional services provided by these professionals. And the reason why we have this dual indemnity limit ceiling is that not all accountants and lawyers charge the same rate per hour. Right, so if you're a Sandton tax attorney, your rate will be much, much higher than if you're a tax accountant from Pofadder. So therefore, we have these double indemnity limits. So again, if you're a small company of less than 3 million rands annual turnover, your annual indemnity limit is 250,000 rand or 50 hours, whichever is the lesser, per annum. So you can have many claims as long as your indemnity limit does not exceed that in the insurance year. Let's take, for example, a 50 million rand turnover company. Your premium is 1,060 rand. Your annual indemnity limit is 750,000 rand or 200 hours, whichever is the lesser. And at the top there, you'll see annual aggregate indemnity limit limited to 100 hours for any one claim. So your indemnity limit is 750,000 or 200 hours per year, whichever is the lesser, limited to 100 hours per any one claim. So you can claim more than once a year as long as none of those claims are more than 100 hours, or in annual aggregate, we don't go over those limits. We manage that very closely. The indemnity limits are placed high enough so we cover 99.9% of the cases. As I said, we've only once ever had to exceed that in our lifetime in the 10-year history of tax risk insurance. And even if we exceed, we have to exceed those limits, you are then still able to utilize our expertise or the people that we've used in the claim at the preferential rates that we get. So you still score on it. For individuals, we look at your taxable income in the last year. There's the taxable incomes. For up to 2 million, between 2 to 5 million, and over 5 million, we do special underwriting. There's the indemnity limits, which is slightly different than companies, and individuals are limited to 50 hours for any one claim. This is what the rate chart looks for trusts. So we have the 2 types of trusts. One is called the trading trust, and it says so in the definition what a trading trust is. It's a trust that actively carries on trading or is used in the conduct of business. So many people use their trust as a business, and therefore you'll see that the rating structure is very similar to what a company is because the risks are similar. The indemnity limits are slightly different. It's on your application form, so you can see what the indemnity limits are. There's also then what we call a passive holding trust, and a passive holding trust is what trusts were invented for in the first instance. It's a trust which holds assets for passive investment income only. So it's not a business. You have your properties in there, your equities. There will be transactions through it, audit fees, maybe some beneficiary payments, etc., but it's not a business. It's a passive holding trust, and it's a flat rate of 292 rand a month, irrespective of the size of the assets in that trust. So that's what the 2 trusts look like. Same application form, and the premiums are there for you to have a look at. So that's the end of my presentation. It's now 1 minute after 11, so my apologies for running late. 1 minute's not too bad, I don't think. If you need more information, we have a website, www.taxrisk.co.za. So loads more information on there. Some frequently asked questions, some more examples. The video is there. You can download the application form from there. So it's a very comprehensive website. It will give you all the information that you need. I will also take some time after this session to send you an email, which will have my contact details on it. So you're more than welcome to contact me. It will have the copy of the application form on it, so you're able to buy the cover fairly quickly if you think after this presentation you're exposed to some risk and you like to manage that risk a bit better, which you will then return to FPM. You can of course speak to Rodney and Charmaine and your advisor at FPM. They've all been trained on the product, and you're more than welcome to give them a shot, get some advice on how to go about it. They are your brokers, but like I say, if you have some technical information together with your broker, by all means, give me a shout. I'm always happy to ask questions, especially if you're uncertain. If there's some gray area that you don't know if this will be covered or not, we get a lot of those questions, and I'd rather answer those questions up front for you than wait till the end of it, or when there's a problem claim and it doesn't work that way. So that's my song and dance, Rodney. Thank you for having me on this morning. There's an email address at FPM where you can send your application forms to. I will include that in my email that I'll be sending you. So that is pretty much it from me for this morning. Thank you very much for taking the time and listening to me. I hope it's been informative. It's a new product in the market, so I thought it might be worthwhile, or FPM thought it might be worthwhile to have a discussion with you guys to introduce the product. You can have some decisions if you want to take out the cover. But as I said before, that your risk of suffering from a SARS audit or dispute is significantly higher than what it used to be. So we hope we get many, many more clients from this. Rodney and Charmaine, thank you very much for your time this morning. I really do appreciate it.
Thank you very much, Willem. Very informative. I think the message at the end of the day is that it's not a case of if you get audited. I think it's a case of when you get audited. So guys, yeah, feel free to contact us. We're here to assist. And thank you very much once again for your time. Thanks, Charmaine, for organizing this. And yeah, we'll chat again soon. Thank you very much.
Brilliant. Thank you very much, and enjoy.